Good morning, everybody. Hey, it's Friday, May 31st. Think about this is the last day of May, and tomorrow morning we wake up to be June 1st. And so May has been a really choppy month for us and for the markets as a whole. So as we get ready to speak with Dave here in just a little bit, we'll be talking about how that's going to impact us going forward. It seems like our president has decided to kind of tweet again overnight, which is putting a lot of things down in the market. So hang tight. Looking forward to our conversation with Dave today and getting some insight there.
5.7 Light FM. Hey there, it's 8:40. That's 20 before 9 if you're still insistent upon analog. Right as the markets closed yesterday, President Trump announced that he wanted to start bumping the tariffs up on stuff coming into our country coming out of Mexico as an effort to leverage Mexico's cooperation on the illegal immigration problem. And boy, oh boy, are the markets impressed. Let's see what's going on with your money this morning. Phillip Statler's in his office at Statler Financial Services in downtown Sebring. Would impressed be the term, or would going over like flatulence in church be a better term, Phillip?
Dave, there's sometimes I wish you would just stay off the phone, quit tweeting, and just be quiet, because this is a case where things went well yesterday. The markets had a little uptick, and then today, oh my goodness, we are falling like a rock.
Yeah, I was kind of thinking yesterday that we were kind of okay getting used to the brave new world of tariff wars going on with China, and the world could go on, just ratchet down a little and build up from there. And then, like you said, President Trump tweeted, and the biggest concern that I know a lot of folks are worried about, me among them, is that now we're using tariffs as leverage to try to get cooperation on another issue, and that's the immigration issue with Mexico. So economists are sitting back and going, how can this possibly end up well? And boy, it was like 150, 200-point drop in the Dow futures from the second he let that tweet out, and we ain't been going in the positive direction since, have we?
No, we really haven't, Dave. And the other thing is that, we just came to a deal with them with NAFTA. And so this just blows in the face of that whole agreement. And so that's going to be problematic also.
You think it might be just saber rattling, and gosh, I hope it's the case, because this is one of those things where they're really Mexico would like to fix the illegal immigration issue. I mean, they don't like the fact that while their economy is booming, good employees are crossing the border. Frankly, it's not in their interest either. And if the immigration issue were handled, some of their drug cartel problems just south of the border would go away. Somehow leveraging them with tariffs to try to fix that. My reaction was basically gobsmacked. I don't know what in heck we can do to solve this particular threat.
Well, I don't either. I'm hoping that he's going to come to a senses here and resolve this another way, because this is definitely not the way. Hey, on another sort, we've been talking about interest rates pretty much all week, and we hit a new low when it comes to yields on the 10-year. Down below where they were yesterday to 2.18% is the yield on the 10-year. And we look at that and compare that to the 1 year. The 1 year is at 2.25 right now. So we've got a pretty big inversion right there. And the 30 years coming down too. So we continue to see that flight to safety, and we continue to see some inversion within some of the sectors of the U.S. Treasury notes.
Oh, without a doubt. Yeah, the shorter-term federal bonds are I can almost visibly see them falling this morning as I was watching them. The 2-year and the 5-year bonds are now under 2% yield, which really underscores that investors in the equity markets are going, they're basically saying, holy crud, get me out of this thing and get me to some place where I know I'm going to earn nothing for a little while.
Yeah, the 5 years at like 1.98 right now, which is crazy low.
I remember seeing that low. Can you?
Yeah, no, I can't. So we continue to see that thing falling. We did have some good news, though. I mean, that's not good news there, but we had a couple things come out The personal income actually went up higher than expected, Dave. Expected to increase by 0.3%. It actually went up 0.5%. So we did have a little sign of some good news on the last quarter.
That's good news. On my news ticker, everybody was going so verklempt and changing underwear over the tariff and the bond inversion. I didn't catch that. It's good to see some good economic news. Another bit of news that might help things a little bit mid to long term is over in Europe, the central bank in England raised their interest rate for the first time in 10 years yesterday. That might be in preparation for a need to redrop it when they actually implement Brexit. But there are some things indicating that economies are not on a bad footing. We're just kicking them where it hurts on a constant basis, and that's what's giving us our upset.
Well, it is. We continue to deal with the trade wars. Now we're not just with China. Now we're going to the other side of our country, to Mexico. That's just not going to be good if we continue to do that. Because one of the things I read was that, autos from like Japan and Asia and Korea, a lot of their stuff is manufactured in Mexico and imported to the United States. And so that would be a 5% increase on those types of products. So not good at all.
Yeah, my new car was a Japanese brand, but when I got the label and I read it through, it was assembled in Mexico. So basically we've got an Asian issue, and then we're going to turn around and double up the issue again with Mexico. So, I mean, this is not going to look good on any front, is it?
No, it's not. Hey, we do have some reports coming in today too, Dave, that have hit the books today. We've got Big Lots came in. Big Lots on the retail front, they had a really good quarter. They beat by like 22 cents a share. Now, revenue was only slightly above forecast. They did miss on same-store sales, but they raised their full-year profit guidance. So kind of a mixed bag with them this morning, but they're liking it. They're up almost 11% this morning.
I was going to say they weren't listed on my winners and losers list, but I saw the headline coming across that their stock was skyrocketing. Nice to have some green ink at least one store. Got any more green ink to share with us?
We actually do. So this is the first quarter for Uber Technologies to report. Uber just went public, last week or the week before. And so this is their first quarterly report as a public company. And they only lost $1.01 billion, which I guess was good because their stock's trading up today. I guess it was expected to lose more than that.
Had some fun with another company yesterday. They weren't half as crummy as they thought they were going to be, right?
Exactly. Now, we do have a loser here. Gap came out. They reported 8 cents less than expected. Revenue was below their forecast. Same-store sales declined. They had a 4% decline in same-store sales, which was a lot more than the 1.2% decline that had been expected. And so they're getting hammered today. They're down 14.5% this morning. They will open at a new 52-week low.
Ouch.
Yeah.
Any other indications from the companies we trade before we wrap it all up and give them the bad news on the indexes?
We do. We have two that I think are people will know and understand. That's Ulta Beauty Supply. They came in about 20 cents ahead of estimates. Revenue was a little bit below forecast, though. Same-store sales were in line. They're trading down 3% this morning. And then a big known name today, Costco. They beat estimates by 7 cents a share. Revenue was above forecast. They missed on same-store sales, though, by about 0.1%. They're trading down this morning about 1.75%.
Ouch. Well, we've got that mixed bag, and now let's give them the real bad news. 45 minutes before we start throwing real money around. A modest up day yesterday. Then we got kicked in the pants right after the markets closed. 45 minutes early. Where are we going this morning, and how fast are we going there, Phillip?
We're heading south, and it's not a slow fall right now. Not as bad as we've seen on some mornings, though. The Dow's down 263 points, which is a little over 1%. The S&P 500 is down $30, down 1.1%. NASDAQ's down 96.5 points, 1.3%. Gold is ticking back up over $1,300 an ounce to 1301, and we've got silver at 1450 an ounce. Crude oil is taking a big spike down. I think the crude oil inventory came out yesterday. I think it was slightly higher than expected, down 2% this morning to $55.39 a barrel.
And that's kind of backhanded good news too, because we're worried about concerns on demand as well, hitting those markets. World markets overseas. Interestingly, the only market that really was not a monster loser overseas last night were the Chinese markets. They probably turned around and said, "Oh, thank God, he's looking at another country other than us at the moment." But everybody's in red ink. Asian rims, so are the European markets this morning. Phillip, somebody needs advice to stabilize retirement and make sure that you can afford to retire in these weird market times. That takes solid advice. How do I find that from you?
Hey, then give us a call at 382-0037. With all the volatility we're seeing right now, Dave, it's a great time to make sure that folks don't have too much risk in their portfolio. And that's a good time to do our X-ray review to dig down and find out what they do hold. And they can also follow us on Facebook, where we repost this every morning. And then follow us on our radio show, Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And streaming, of course, at newstalk730am.com twice a weekend for the Statler Financial Radio Show and everything on the radio on that station. Phillip, thank you so much. Let's cross our fingers that we have a little bit of turnaround to the positive side today, and we'll check in with you on Monday morning, all right?
Sounds good, man. You have a great weekend. I look forward to talking to you on Monday.
Have a good one to you, too, as well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hello. Hey, again, I want to thank you for joining us today. As we end up the month of May, it looks like it's going to be a pretty volatile day today. I hope that you'll join us again on Monday morning for the Dave and Phil show, for lack of a better term. We look forward to seeing you then. Have a great day.